Okay, cool. Yeah, we're live. So today, yeah, we've, Gamma Swap's been out for a while, and we call ourselves a Perpetual Options protocol. But we realized that, yeah, it might be worth explaining, what a perpetual option actually is, and why we think it's an important new category in DeFi. So, give a quick intro. Devin here, one of the co-founders responsible for BD and growth. And yeah, I've been working on GammaSwap for a couple of years now. And yeah, we've been live for a while and starting to get a little bit of initial traction. But perpetual options, yeah, what we call a perpetual option is essentially borrowing liquidity from an AMM. The reason we call it an option, even though, yeah, you're not actually, buying a contract, is because we say that the automated market makers are replicating what it's like to sell an option, to like sell volatility. And typically they've been compensated only directly via swap fees, so volume, but there's never been a way for someone to actually long that volatility. So when people buy a perpetual option, they're actually borrowing in Gamma Swap, and they're long the volatility. So they're short the IL, long the impermanent gain is what we call it. Could be in a straddle, which is market neutral, just betting that the volatility is underpriced, or useful as a hedge for impermanent loss, and then long and short, which are more directional. And yeah, I'll let Daniel talk a little bit as well. He invented the protocol, so he can talk a little bit about yeah, why he thinks the protocol is important, but also yeah, why we consider this a perpetual option.
Yes, Daniel here. I worked on this. I started working on this in 2021, and the reason why is because I realized that I was thinking about a way to lower risk on my transactions, since I used to trade also cryptocurrencies all the time. And like options is a good way to do it if you're providing liquidity to lower your risk. But yeah, the problem was doing it in DeFi, and there was a lot of reliance on oracles at the time. And I noticed that with Uniswap, since that's one of the places where I also provide liquidity, you're essentially increasing your exposure to one of the tokens versus the other token when the price goes in one direction, and when it goes in the other direction, you do the opposite. You decrease your exposure on one token, increase it on the other token. So that behavior there is essentially following the momentum strategy in trading. Like traders trade mean reversion or momentum. Almost every strategy is mean reversion or momentum. So so if you're providing liquidity in Uniswap, you're essentially selling. Well, taking the other side, you're betting on mean reversion. So that's what's called a volatility seller. So then, and because you're decreasing your exposure on one of the tokens, then if you were to take the inverse of that position, you're increasing your exposure to the other token that's actually going up in value. So that's why it replicates the momentum strategy, which is essentially a low volatility strategy. So that's how I came to the realization that this is actually a way to create volatility market using Uniswap. And since options is just a volatility product, you can make the analogy that trading volatility through Uniswap and now through GammaSwap is essentially trading. It's like trading options. So yeah, so that's how I came up with it.
Yeah, great. So we're gonna head to the next slide now. Just talking a little bit about the purposes of derivatives generally. So yeah, some of the main purposes of derivatives, of course, derivatives have been around forever. A lot of the early, uses of futures and options contracts were for commodity farmers, to hedge, basically lock in a price for the commodities that they're producing, because if there's a drought or other kind of like climate scenarios, they wanted to hedge that risk of, yeah, what the price they could get for their crop is, and just locking those profits early on so they can sustain their families. So those are like some of the earliest use cases of hedging, and now people, yeah, use these products to hedge in all kinds of exotic ways to hedge, their delta or their price risk, whether that's a delta one product like spot or futures or dynamic delta, kind of like options or impermanent loss. They're also a great vehicle for speculation, enabling more leverage than you could get on the spot market. So yeah, it's kind of interesting because I feel like futures in traditional finance are not as retail dominated because although they're kind of simpler, yeah, they're not available in as many markets. It's mostly like commodities and then ETFs. While yeah, options have actually now become the retail product of choice in traditional finance, even though they're significantly more complex, just because you can get different types of exposure, but also yeah, it's available on the majority of stocks that retail's wanting to trade. So allowing them to get leverage on very specific types of markets and a longer tail of markets. And then, of course, arbitrage, locking in risk-free profits. This could be, between the derivatives and the spot market. This could be between, different market venues for the derivative, et cetera. But it also allows people to capture more market inefficiencies and drive more liquidity, just generally to the space, whether that's, yeah, people kind of using these products as insurance or just driving, yeah, more kind of like volume and enabling more participants to actually, yeah, trade in these markets. And so, kind of similarly, we see ourselves as, having some of those characteristics of what attracts potentially people to options markets. So, like right now, futures are a very simple product, but they're only available on certain assets that are provided by an oracle. While Gamma Swap's an oracle free, so we could technically support leverage, for the large caps, and then basically any token that you can create a pool for. So any ERC20 token, and yeah, also different ways to hedge. So futures are a great way to hedge your delta, and you can even get paid for it if you're short and the funding is positive. But yeah, if something is more dynamic, like impermanent loss, it becomes difficult to hedge. I mean, you just can't fully hedge that using a perp, or yeah, for those specific markets, it's not something that can be hedged at all. The long tail of like, yeah, meme coins or altcoins that maybe just don't have an Oracle or SEX listing yet. So that's where we see, Gamma Swap really fitting in is those, yeah, kind of like venues that no one else can participate in yet. And Gamma Swap has kind of an edge there. Or perpetual options generally as a category. I don't know if there's anything you wanted to add here, Daniel.
Yes, I'll say that the reason why I think the futures market is not as popular in TradFi is because there's also, well, besides the fact that there's not enough products in futures, there's only like a handful, like the commodities and the equity indices. The equity index is the most popular one. But the barriers to entry for it are much more significant than the options market in TradFi. Like in TradFi, you want to buy an option on a small cap, it's only going to be like maybe $100 that you have to spend. But to hold a futures contract overnight, you're going to have to keep a collateral of at least like $2,500 or so, at least. And if the stock moves too much, like the S&P 500, then you're wiped out because your leverage is well, first is gigantic in futures market. The most leverage, the more leverage that you can get is there. Whereas with options, well, you can have significant leverage too if you're holding an expiration that's very short dated, like 1 day option. But you don't have to keep this large collateral amount overnight that prevents you from coming in. So, and that's one of the reasons I think why it's picked up on DeFi, like perp futures, because the barriers to entry are much lower. So even though there's still only a handful of products because of the need for oracles, the barriers to entry are much lower. It's like you can open up a position in GMX with only $100, for example. You can't do that with the S&P 500. So minimum, I think, would be if you have an account with some broker that specializes on this, you probably need at least $500 and only intraday. So by the end of the day, you have to close it because you need to have a collateral of at least 2,100. So with the gamma swap, no, we don't even have to worry about that. Like the minimum amount is like $1 if you want. But and yes, and we don't have expiration dates, so barriers to entry are much lower. And yeah, so I think that's a big upside for options in DeFi. Like the way that we're building it, which is decentralized and open, permissionless. No need for Oracle, so we can have a plethora of products, unlike perp futures. Another thing also is the aspect of hedging and arbitrage. Like arbitrage is great when you find it, but the problem is that most likely you're not going to find arbitrage because other people will have picked that out already, or there's something else, some reason why the arbitrage is happening. Like it's not really risk free. So so the best case scenario usually is to lower your risk, and that's actually difficult to do with futures because futures is the original purpose of it was to a futures contract. So you want to sell something and pay for it in the future. So that you want to sell a whole spot, whereas it's not exactly meant to lower. Just get like be surgical with the risk reduction. But with options, you can actually do that because you don't have to hedge out the whole position. You can adjust the different strike prices, have different deltas. So you can be very surgical on how you want to adjust your risk with options, and you don't have the problem of keeping collateral in to prevent you from liquidation from price changes. And the good thing about lowering risk is that if you lower your risk, then that means that you can even leverage your position even more because there's less likely that things are going to go bad or because the risk is much lower. So that's really the main thing about lowering risk or the purpose of hedging, really, just to lower the volatility of the risks in your portfolio. And since you have a much lower risk, that means that you can leverage up even more, so you can magnify those returns. So yeah, so that's just what I wanted to add.
Yeah, right. So I guess to go off of that a little bit, right now we have our current product, which is the straddle, which is a direct short of the LP, and the long and short, which are actually straddles that are rebalanced to look like calls or puts. But yeah, we're working on a product now where you're going to be able to get more leverage, probably up to like 10x. And I think that's pretty interesting because futures are a very simple product. They're super liquid, and you would want to get like maybe a little bit more leverage via those products. But of course, like if there's a large amount of open interest or the markets are super volatile, or I don't know, maybe it's an order book and sometimes there's huge price wicks, you might be worried about that liquidation price. So that's the great thing about options generally, and we're kind of seeing this with gamma swap, which is pretty interesting to see like the parallels between DeFi and TradeFi in some ways. But generally, an option is a little bit more expensive, but you get reduced liquidation risk. And so, yeah, I think you're already seeing that, pan out. And then as we, kind of create more ways to interact with these contracts and different types of like leverage and delta exposures, you'll see, yeah, some of the benefits of not having like a liquidation price, for example, and how you can add a little bit more leverage than without worrying about that liquidation price. Let's go on to the next one here. And so, yeah, we'll talk a little bit about why perpetual features became popular, which, yeah, we're big fans of. So, I think Arthur Hayes invented the perpetual swap at BitMEX, and that's the funny thing is that people call these perpetual futures, but they're not actually futures. They're more kind of like an equity swap, but essentially, yeah, there wasn't much of a derivatives market before. I think there was like an inverse Bitcoin futures, which had like physical settlement, like daily settlement, and a bunch of expirations. And there was some liquidity and arbitrage happening, but now futures have like cumulative trillions of volumes to date. So like infinitesimally smaller than like the perpetual futures market. But Arthur Hayes, created this product, And one of the reasons it did really well was you had reduced liquidity fragmentation because there was no expiration dates. You just would constantly roll over those positions. And so you would aggregate, liquidity just to that market instead of having it dispersed across all the expirations. Because there was no physical settlement, a lot of this liquidity was, kind of virtual. You could enable more capital efficiency. It's a very simple product because traders don't even have to worry about their expiration. They can just long or short with whatever leverage they want, and that's it. Very simple to kind of like engage with, which I think is great for getting more retail adoption. And since some of the early participants and a lot of the participants now aren't maybe sophisticated or have experience with traditional derivatives products, those simple products do really well. And then like I mentioned, it's this perpetual kind of like future instrument, but a lot of the characteristics are different than a typical future, which is not even having that right to buy, like essentially that contract that's going to physically settle those assets. It's just something that's rolled over and is representative of the underlying assets, but taking out completely, the physical settlement of the assets. Yeah, I don't know if you want to add anything to that, Daniel.
Yeah, so like products like perpetual futures already existed in TradFi also. I mean, they were kind of like on the edge. Like, for example, the foreign exchange brokerages, they would give you CFDs and which worked like a perpetual futures contract. But and there were also there were eye gouging people with spreads there. But I think that the main contribution of the perpetual future that Arthur Hayes created was that you could have funded with a Bitcoin, and so since you could fund it with Bitcoin, well, it's not just easier to transact with by moving it around, so you get your funds there the exact same day, but also the fact that you're as even though you're short the basis, so you're paying the rate differential. If you say you're betting that Bitcoin is going to go up in price or something like that, and then Bitcoin goes up in price, your collateral is also going up in price. So you could just profit there of the interest rate differential much easier, which is something that you couldn't do with like the foreign exchange market with CFDs. So that was a major difference, and it made some strategies, new strategies available. Yeah, that's it.
Very cool. Yeah, and I kind of mentioned this before, but perps have been super dominant. So you can see the lead, really started in 2022, and it's only been accelerating compared to, other types of market venues, and generally has been the dominant derivative in terms of open interest. Surprisingly, though, even though a lot of people, I would say, there's a much smaller pool of people actually trading in options. It's not an insignificant market in crypto. I think the problem is that, most of it is on centralized exchanges like Deribit, which have, which not everyone can access, and it's a huge kind of like institutional audience using those. So it's a very kind of like smaller pool. But in terms of the actual like volumes and market size, it's actually pretty decent. So, typically you see like 50 to 75 million in monthly volume during the bull market, which is a fraction of perps, but not small. And then, it's on Deribit and it's mostly on BTC and ETH. There's some, DeFi options like Lira, Avo is a new up and comer as well with an order book, but still, not really as much as the centralized exchanges. But there have been times actually where the crypto options market has been larger actually worldwide across market venues than futures. Like end of 2023, CoinDesk wrote this article, and BTC open interest was actually higher on Deribit than the actual like futures counterparty, which was a first. So I think we've actually seen, Deribit and DeFi options growing with, very limited kind of assets that have been out there, and very limited amount of market participants enable like actually being able to trade in these like more liquid venues. So I think despite some of those things, options have been doing pretty decently. But yeah, very kind of harping on this very small pool of people. It's not some of the things we value. Unfortunately, like in crypto and DeFi, which is like permissionless, open. Yeah, unfortunately, the options market is, at least the liquid options market, is not permissionless or open right now. It's very, very centralized.
Yeah, yeah. I mean, the only thing I would add is that we have a very short time frame to a short period of time to measure all this. So because everything is pretty new, so something that we can refer to is the again TradFi to see how options and futures evolve in those markets. If futures used to be dominant up until most recently. And I think that has well, a big part of it. Even though futures also went up in like volume of futures also went up a lot with electronification of the securities markets. Options also has caught up, and it's I think it's surpassing equities or match equities, and that change happened mostly since the 70s, when even though you already had a very developed futures market back then, in the 70s, that's when the options market started picking up. And one of the main reasons was that people were able to quantify the risk of options better, because there were better methods to do it, better models, like the Black-Scholes model, for example. And since those models make it easier to quantify the risk, and it makes it easier to figure out if you're getting a good deal when you're buying an option or not. So, and with Uniswap or Gamma Swap, what we're doing, the formula that we're using is pretty simple compared to formulas in other AMMs like Uniswap v3, for example, which is way more complicated to try to figure out what's the expected return. I think that's why I'm pretty bullish on options in DeFi, like the way that we're building it, picking up substantial volume.
Yeah. So you kind of went into my next slide here. So global options. So futures has been like the dominant derivative in TradeFi until 2021, like really COVID. Actually, I think Robinhood contributed a lot of this from the retail side. And when that retail kind of like volume and speculation you had a lot of market makers, coming in to arb some of these inefficiencies, or really profitable kind of like strategies they could execute that are hedged. And so you just had this, rush of liquidity and inflows. And the music, hasn't been stopping since 2021. Options has been growing substantially. So I think right now, 2023, global options market was like 3x futures. And that was 100% growth in the options market in 2023 globally. A lot of it was actually in India, where a lot of the growth was happening. While like futures between 2023 and 2022, the open interest and volume stayed roughly the same. So we're seeing a lot of growth actually in TradFi options. It sounds like Daniel was saying that before the futures, options had surpassed spot markets, which kind of makes sense, like given how the notionals are much larger. But before, maybe options were really illiquid because they were kind of difficult to price. No one really knew the returns. And then, people created the Black-Scholes model, which priced basically, I guess like the big thing was pricing options based off of volatility, and gave, a lot of these funds and participants a way to calculate the returns and actually understand how to price these things. So there's so many factors to consider: the Greeks, the expiration, the implied volatility. I mean, all those things can be super important, and that's a lot of variables to factor in. So I think that's kind of the hard thing about building something new, like with Gamma Swap. Where one of our biggest things that we're focusing on right now is like just educating people on the market, creating ways like price this or hedge this out, and also expanding kind of like the offerings. Well, not like necessarily the contracts, but the ways you can interact with them, so that people can execute like different strategies. And took options a while to take off in TradeFi. Really didn't see much volume until the 70s, which compared to futures and like stocks, stocks and futures were extremely popular before that. But then, you've been seeing this growth, and this growth isn't even like stopping now. 100% year over year, when you're talking about like, almost $1 trillion like markets, like these massive markets, is a lot. And you're still seeing that growth in options, which is amazing. So I think DeFi options like has collectively like 200 million in TVL. Like that's what I saw last time in DeFi Llama. But I think it's a huge market, and I think like perpetual futures, what we might see in options markets is going to look a little different than TradeFi, and there's not going to be one size fits all. I think there's the opportunity for multiple types of options, to do well. But even with like traditional options, like what I've seen like Lyra succeeding in with recently is kind of like these managed strategies or vaults, which allow people to more passively engage, which is typically how we actually see a lot of the products doing well in crypto are kind of the more passive products, right? Like Lido, restaking, Aave. So I think the way options are going to continue to grow is going to be really interesting. It's going to look, there's going to be some similarities, but it's also going to look a little bit different than TradFi. But I think there's this massive market opportunity here, just because of some of the the optionality you have, and the amount of like market availability you have with these type of products.
Yeah. So, like the thing I'd say is that I think the options market is bound to be bigger than the futures market in TradFi, in DeFi, and the reason is because you can replicate. Well, for a futures contract, you always need a type of oracle. So you're limited to the amount of products with enough liquidity to be able to create a futures market on, and that's why in TradFi there's only a handful of markets. Whereas with options, you don't have that limit. It's so you can have a plethora of markets, and therefore is likely to get bigger in TradFi and especially in DeFi, since there's lower barriers to entry. And also another aspect of it is that an option, like at the most basic level, what it is a portfolio made up of a bond and the asset the underlying asset that you're trading, and it's just rebalancing that portfolio over time. So doing that with a futures market and DeFi, that's not how it's supposed to work. It's supposed to be static. So you're always going to have that collateral risk, whereas like based on the price. Whereas with DeFi options, because that collateral risk, you're going to need an oracle always. But with DeFi options, you're not going to have that problem, because since the portfolio has to rebalance, and the AMM rebalances automatically because that's what it's designed to do, then you're never going to have that problem. You can have a plethora of markets in DeFi options, way more than you would have with perpetual futures in DeFi.
Sure. Yeah, and I think we touched on this a little bit, so we don't have to spend that much time on this slide. But I think like a big question is why does retail like options if they're so much more complex than futures, right? And some of the things we touched on earlier, right? Like retail, they want to trade a specific stock and they want to get leverage on it. And options just, they have more markets. Futures are generally on in TradeFi, they're on commodities and ETFs, I guess, but not really individual stocks as much. Definitely not like the long tail. So retail loves that, trading options on like Nvidia, Tesla, or even kind of like longer tail stuff. The reduced risk, so you don't have the same like liquidation risk you have with the futures. That's true, in TradFi, and it's also true in DeFi as well. So it's a way you could get more leverage. It's going to be a little bit more expensive generally because of that theta or that funding rate cost, but you have less liquidation risk. So depending on the type of risk that you're willing to accept, could be a better option for some people, especially if you're really amping up that leverage. And then, yeah, I think honestly we have to thank Robinhood a lot for this. I think in especially in DeFi, like the UI is really a big part of the user experience, and trying to simplify things down as much as possible, I think is a good thing. And I think Robinhood did that really well with TradFi, and also as an onboarding flow for crypto as well. I think they have great wallets, have a good partnership with Arbitrum. One of the reasons we love Arbitrum for other reasons, and something we've been focused on as well as a perpetual option is reducing that complexity. We're still a bit complex, but reducing it where we can and trying to simplify the experience as much as possible. That way, yeah, we're available to a wider range of audiences, and yeah, the institutions or the sophisticated users can still execute that complex strategy if they want, but retail can come in and hopefully get a quicker understanding of how things work and just go in and execute a strategy. Because generally, even in DeFi, like a lot of these more sophisticated actors are interacting with contracts directly, or yeah, doing something, using a spreadsheet to manage like multiple legs of a trade. So yeah, that's what I would say is that UX is important, and if you can make good kind of like advancements there, that's very helpful.
Yeah, I mean, retail likes options. I think that the main reason is just lower barriers to entry. In
Yeah.
TradFi, at least, you don't have to have this big collateral to open up a futures position. Already touched on that though, but there's also I mean, and also for leverage, also the product with the most volume is the one that's expiring the soonest. So like the 1 day options. So I think it all comes down to that really, lower barriers to entry, which is something that we can do with GammaSwap also, since you can have any expiration date and open up a position with any amount, as long as there's available liquidity there. Yeah, that's all I would add.
Yeah, and then going on to perpetual options, because we've been leading up to this, and yeah, we even kind of discussed some of these things. So I think perpetual futures, what they did and how they aggregated more liquidity was they reduced the fragmentation in a lot of ways. So they reduced it across expiration, but I think the problem with options is not only do you have multiple expirations, but you have multiple strike prices. One of the cool things about perpetual options, or at least the way we've been building it with GammaSwap, is that you could have basically any strike price with any kind of virtual expiration date, what we call the time to liquidation, uh, all out of the same pool. And soon enough, you're going to realize you're going to even have multiple types of like trades that are executed with like different types of leverage and delta and exposures all from the same pool. So I think something that's really important in crypto is just reducing that fragmentation as much as possible, right? So I think those are the products that have done well in crypto, whether that's through composability or being able to integrate all that liquidity into one and not separating it out. That's huge. I think it's one of the reasons why perpetual futures have done well in on sexes and actually on dexes, where things often are a little bit harder with gas costs and with kind of like other constraints, building directly on chain. Fully permissionless, so more markets than a typical options or futures platform, because perpetual options use the invariant of the AMM as the debt. The price of the assets don't actually matter. It's just the supply and the growth of the in the fees. So the K in the X times Y equals K formula. That's how we're measuring the debt. And one of the reasons we're doing an Oracle. So if you can create a pool for two assets, you have a market for leverage with perpetual options. Yeah, I was kind of touching on this before, but it's a much simpler product because yeah, there's less kind of things you have to select than or like decisions you have to make than with the typical option. You can basically just select your leverage, which is essentially your LTV, and then that is creating that virtual time to liquidation for you. And so that's basically your main parameter, along with the deposit that's going to decide the position. So yeah, less choices, I think, makes it a little bit easier for people to engage. But then, yeah, if you want to interact with the contracts directly, you can do a lot of different things. It could get really interesting if you're more advanced. No counterparty risk. I think that's just part of being in DeFi. You have smart contract risk, but you don't actually have any direct counterparties. So yeah, I think a lot of people realize after what happened with FTX, like the importance of not having counterparty risk, and a lot of um, I guess a lot of lenders went down, but things like Aave actually stood pretty strong through that crisis. And then I guess the interesting thing, it's not really anything um, beneficial. It's just kind of like an interesting observation is that, like how perpetual futures aren't really actually a future, it's more kind of like a swap. There's no purchasing of the underlying, there's no right to purchase the underlying asset or like that contract to actually buy it. It's just kind of this virtual thing that's tracking the underlying price. Perpetual options are kind of similar. You're borrowing liquidity from an AMM that's mimicking the returns of an option, but it's not actually an options contract because you don't have the right to buy those assets. It's more like you're getting exposure to those assets by shorting this AMM pool. So in a lot of ways, it's more like a lending market, except you don't have the same bad debt risk because at least in the implementation we're building, all that collateral stays inside the contract of Gamma Swap. So there's not really, yeah, that same risk that you would have with the normal lending market in terms of bad debt.
Yes. Yeah. So I think one of the main things that is going to come out of all this is what future products that don't exist right now are going to be possible now because of perpetual options. Like when I first got involved in with cryptocurrencies, everybody used to talk about micropayments with Bitcoin, but then the transaction fees got expensive, so it wasn't even worth it. But with DeFi now, there's all this stuff that's happening with trading. But another thing that people are talking about is the tokenization of everything, like houses, cars, motorcycles, art, pretty much anything. So, and all these products need insurance that you're required to buy car insurance, home insurance, and options is essentially insurance. So this is a future market I think is gonna like beyond just trading that people do on a day-to-day basis or for just assets in general, but just with the tokenization of everything, it's gonna come the need for to insure everything also on chain, and that's also like where perpetual options is also coming in, where you're gonna if you're gonna insure it, you're gonna need perpetual options since insurance is essentially an options contract. So that's something that I think we'll see down the road, and it's another big source of liquidity for all these markets, and something that hasn't been possible until now, but be able to do it at even a micro, much smaller level that wasn't possible before.
That'd be pretty cool, like a fungible market to tokenize, yeah, like certain types of art, and then you have that art and you want to hedge it. You don't even need to go through traditional rails, right? Just create a liquidity pool and gamma swap with USDC and short it or buy a straddle, and then yeah, you just got insurance. Might be expensive insurance at first, but if enough people participate, could be worth your while, depending. But that's how all markets start. And yeah, I think, that's always the interesting thing with DeFi is things don't really end up the way we expect. Some things come up that are kind of similar, but they come up in these completely new ways, right? Like how lending is in DeFi, how exchanges are in DeFi. with AMMs, like everything. So I think it's cool when you create like a new primitive, like thinking about all the possible synergies with existing primitives or protocols or real world assets that will come on chain. So yeah, there's a lot of potential opportunities here if you can essentially hedge any asset, like any asset that's a token. If you can hedge it, I mean, there's just so many things that could come from that. And yeah, if people are able to hedge things or buy insurance, hopefully it should drive more liquidity too, because now people can actually control their risks much better. So hoping it just drives, yeah, more liquidity to DeFi in general.
Yeah, and this is not something that you can do with perpetual futures. Is the reason why it's not done with futures contracts also in TradFi. You need options to do this, and that's the cool thing about having a new DeFi primitive for options. These things are potentially possible now. So
What
we'll see how it goes.
why would you use it with an option and not a perp or like a feature?
Because you're not really hedging like the future contract hedges the spot exactly. It doesn't it doesn't just hedge the risk, which is the volatility in prices. Whereas the future the option is essentially a bet on volatility. Volatility is risk, the probability that something will go wrong. So the futures contract is not that really. It's just it's a sell of something in the future. So if you were to hedge it with a futures contract, you're essentially you're not really you're just making money on the interest differential, the interest rate. Not really.
Right.
It's not really a purchase of insurance.
Yeah, you're hedging the delta, right? So like the
Right.
price
Mhm.
risk,
Yes.
but
Right.
there's really no market for the volatility, which is, I mean, crypto is much more volatile than TradFi, which is the gamma. That's why we call ourselves gamma swap. So I think there's a lot of interesting things that come when you can actually like trade volatility, hedge volatility, et cetera. And also why we can have like some products, they can't exist with futures like a straddle, right? If you were to long and short a future, you're not going to get a straddle. You just have like no exposure. You just cancel each other out. But gamma swap, you can get these volatility trades that are really unique and allow for different types of exposure, hedging, insurance, like you name it. But yeah, there's pros and cons to each. We just think options have been so popular in TradFi, and this is a way to do it in DeFi that could really work because of the reduction in the fragmentation, the simplicity, the amount of markets that could be available, and just trying to educate more and drive more awareness to these products. But DeFi is still growing super quickly, and I think we're continuing to see like new products being built. And to me, like, even before I joined GammaSwap, I always viewed options kind of like RWA on chain, which is, I know it's going to happen eventually. I just don't know when it's going to happen or how it's going to happen. And that's one of the exciting things about GammaSwap is I feel like, some implementation of perpetual options is really going to drive, a lot of liquidity to DeFi and be like a viable implementations of options on chain. So really, it was one of the things that really excited me about the opportunity and so excites me to this day is, how the exposure is really in line with some of the primitives we've already seen in crypto.
Yeah. So just to make my last point clearer, so the reason why you can do this with a futures is because suppose you have the asset and then you sell a futures contract to hedge it. Now, if the asset goes up in price, you don't gain from the increasing value, because even though your asset is increasing value, your future short is losing value. So that's why you will sell the futures contract at a higher price than your asset, and you end up making only the interest rate differential between those two. Well, which in theory, should come out to be the current interest rate on like U.S. Treasuries or something like that. But with an option, you can buy a put option on the asset. So if it goes up in value, you still keep the value of the asset that's going up. If it goes down in value, now the put option is going to pay you the loss in value of the asset. That's why it's insurance, and that's why you can do this with options. But you can't do this with a futures contract. You end up paying only the premium of it, or the interest rate. In gammas would be the interest rate that has accrued on the contract over the how long you've kept the put option open. But that's the reason why you can do this with options, but you can't do this with futures contracts. It just doesn't work.
Yeah. Okay. Well, yeah, that's it for today. Wanted to walk through a little bit about perpetual options and why we think they're an interesting category, and also why we, describe ourselves as a perpetual option. So yeah, you were able to listen. Thank you. This is also going to be up on YouTube later. So yeah, you could view the whole thing, pause it, rewind, and be up there perpetually. So yeah, that's it. We're also going to be doing more live streams with more educational series, how to use Gamma Swap, and so just stay tuned. We'll make announcements before, and thank you for the time.
All right. Yes. Thank you.